Life is good, and we have just wonderful, wonderful opportunities as traders right now. Lots of volatility, chances to make more than 8 to 12 ticks, and we'll talk about the 15-minute time frame on both markets today, and we'll talk about the F3 configurations. Now, for those of you that are new to the room, we're on every hour, on the hour for 10 minutes to sometimes 30, depending on the amount of teaching that's done or the questions that are posed. After 11 o'clock Eastern, we'll open it up and answer everybody's questions. This gives the room a chance to trade with as few interruptions as possible, and then we get down to the sales part or education part of it for those that are new to the room. So if you'll bear with us a little bit, we will get your questions answered after 11 Eastern. And if that does not suffice, we've got Post the Market this afternoon. Our general routine is we put out a research piece every morning that you've seen posted into the room. It can be emailed to you. We broadcast on the hour for 10 minutes, sometimes as much as 30 minutes, depending on the situation. At 2:15 Central, we have a wrap up for the day, which is where our overnight trading ideas come from for the people that trade the overnight markets. And last night our recommendation was to sell 128.15s to 19s to see if we could take out 128.04 to 08. We did. And for those of you that were able to take advantage of that trade, you made, potentially 14.30 seconds, almost $500 a position. And the overnight markets trade well for us. People in Europe and Asia wonder if they can trade the U.S. markets, and I'm not saying you should, given your active commodities exchanges too. But there's wonderful opportunity for you to trade the U.S. markets. They trade technically. They honor the support and resistance points late in the day. The U.S. sets the tone. Asia usually follows through. And if there is going to be a change in direction, it'll come out of London. So they're pretty good markets to trade. And there's lots of opportunity for those that are up during those hours. For those of us in the United States, we handle those trade with limit entry orders, protective stops, and you usually wake up in the morning as a happy camper. So the biggest dynamic we have this morning is going to be the 2-year auction after we get consumer confidence out of the way and the E-minis reaction to that. The news out of Europe, it's really, really tough to read. The IMF is going to get involved, which means the United States will get involved. The European Central Bank can't even handle a 21% haircut on Greek debt. European banks are howling about the magnitude of the write-down on Greek debt they're supposed to take. European banks right now are allowed to mark that sovereign debt at face, carry it at par, even though their bank stocks reflect at least write-downs of 40% on all that sovereign debt. So, I mean, there's just a lot of stories coming out. I mean, and I don't know what the answer is going to be. My guess is there's probably $700+ billion worth of commitment from the various European governments, because they've said that's what it is. They might use leverage to double the effect of those funds. And if there are problems, kick them into next year. And that's what politicians do best. Kicking problems under the rug or down the road for the next group of those elected to handle. And the bureaucrats in Brussels and Washington, D.C. and all state capitals and in municipal governments, they like to remain faceless. It's never their problem. They're just there to pick up the pieces, so to speak. So there's a lot of stuff that'll be coming out tomorrow. There's also stories that there won't be an announcement made till the 3rd of November. So we'll just have to see what tomorrow brings. generally around 11 o'clock or noon Eastern time, U.S. time, is when those announcements were made. So we'll have more trial balloons floated today. We'll have more rumors, and that means we've got extra volatility. And you have to protect yourself from risk. You can't go in with naked positions today. You have to pay attention to risk. Risk protection, if you use risk protection 99% of the time, it doesn't count. You have to use it 100% of the time. So where is the first sell? The first sell would be leaning against this high volume number right here, or this structural low. It's very, very aggressive. It's 7 to 11 to retest this low right here. And if we can't take it out, today's 2-year auction will take over, and 2-year auctions aren't bad. And we saw a lot of call protection taken yesterday in the note. Very little put protection taken, and the reason very little put protection has been taken is that since May of 2010, the market has been short. So they're always short going into these auctions paper. The second sell zone is 15 to 19. You were able to execute last night at 15 with a resting limit order. If you took our trade, and this basically picks up the average, the midpoint of volume in this particular distribution. So we want to get short once to see if we can take out the low. If we can't take out the low, then the 2-year auction starts to kick in, and we might, and we'll probably play it from the long side. The first buy zone, allowing them to take it a little bit lower, is 25 to 29. I really do expect that probably to hold. The backup buy zone would be 21s or better, leaning against this low volume area right here. And we'll see how she plays out. Some news: consumer confidence is forecast at 46. That is supportive for financials. It's not a very good number for the indexes and for the stock market. So looking for a place to get short, and then seeing if we can extend the overnight ranges low is what we're looking to do. Listen, I can't tell you how lucrative the overnight session is with our way of looking at the markets. Now, if you get older and you get up several times during the night, as most of us do, you can put your trades out and monitor them a couple of times overnight. But the best way to handle that is, because we do cut our winners short and we do meet our expectations for losers, is just put your trade on, put a protective stop, and stay away from the screens, and wake up the next day, and you should be pleased with the results. Okay, taking a look at this market structurally. We look like we may have rejected prices below 02. That's possible. 128 is a number. There was a lot of call protection taken, and you can see right up here there's a pretty clean break. Now, somebody asked me, how do I see breaks on chart? And the way that you'll see them is that you'll have a bunch of lows right here. Then it breaks those lows, and it comes back up and retests those lows, or the break right there. And there is the absolute low volume number, most recent in the market's memory. When we broke this low right here, it went through. Rich, you got that? I mean, there's no magic in that, so you just go to these charts and say, where's the break? And you can see on the way up, we spent no time right there. And when we break it on the way down, we spend no time right there. So you can see that there's just very, very little volume done in these circles, and that's the clean break in the market. So you just look and see where charts have support, then you break support, and you'll generally get a retest of support or something, and it's a space between support and resistance where you have that very, very clean break in the market, and it is a very, very low volume area. So, I mean, there's no magic to that. It's just using your eyeballs and saying that was support, now it is resistance. That's another way of looking at it. So structurally, a very, very aggressive sell would be leaning against those lows right there. Structurally, the top end of the range would be selling 7s or 7s and a halves. Then you got to come down and you got to break the buck to stick with the trade. Okay, any questions on the note? The biggest thing that we have going for the note today is the 2-year auction. Yeah, the note's fabulous overnight. I mean, it just, folks, if you're not trading the note overnight, find a way to do it. Okay, I think we need to go to the F1 screen on the E-mini. I have no idea why the market is as strong as it is past short covering. 3 weeks ago, we had the biggest open short interest in the NYSE stocks that we've had since the fourth quarter of 2008. And according to some reporting services, the strongest, biggest gains in NYSE stocks have been in those stocks that had the most open short interest. Then we have about a month ago when, in fact, on October the 5th is when it, 3 weeks ago, peaked. Everybody was selling euros and buying dollars for redemptions coming out of the United States out of European-run money market funds where they could get a higher coupon rate. They could make more money to pay to U.S. investors. So there was a big scramble. The euro got down to, I think, 134, something like that. And it's since rallied to 130. Where are we right now? 139.30 as of this morning. It's had a 5 full point rally. Some stock people said strength in the euro. EU deal, things aren't as bad as they are. We're going to have a solution. We'll see. And some people have tied the rally in the stock markets basically to the rally in the euro. But there's so many cross currents going right now. Ultimately, earnings per share will set the tone for our stock markets, and that's where it all boils. Okay, Rich, here's a low. Here's a high. Do you see the clean break in the market right there? This has been support. Now it's possibly resistance. Now the lazy man's way of computing low volume numbers is to go right over here to the long-term distribution. We've got this little spill from, top of this is 67. Bottom of that is 75. So 67 to 65 is doable. The first place we've got to get to is 55 to 57. And that could hold. But as long as 46, 47 holds as support, we've got volume at 67, and then we have volume at 82. And we could get there. Don't ask me on what. It's beyond my comprehension. Yeah, I saw QE. I mean, the Fed's printing money. I mean, why not? QE3. if the euro's up, crude oil goes up. Gold hasn't really joined in this rally, as you would expect. Somebody say the central banks are holding the price of gold down. Okay, when I come to this screen, I mark out the absolute low volume number and the absolute high volume number that surround or encompass the activity. Then I find the minor one. And you can see that there's a possibility right here. Got low volume here, low volume here, and high volume right there. And that could hold the market today. The propensity of this market is to go get stops out one side of the overnight session. And because this market has been pointed higher, my guess is they're going to get stops above 1254.50. And that would put them in our 55, 57 areas. So my idea is P, if we fold this into that, we're dealing with another P with volume pretty high in the distribution. So buying into weakness to come back and retest that number right there is what I see as the first play of the day. But if we don't get to that number, we want to get short to go back and retest this area right here, the 35 to 37 area. And I'm not, we'll just see how far it can take us. The first buy zone was in the 50 area. If we're going to have a real strong market, it looks like we got a shot at our 43.50s to 45.50s, and we can see if they get stops below the overnight sessions low. And then we got to take out 54.50 to stay long. Now, this market is higher consumer confidence at 10. Is forecast at 46. That's not a very good number. When you take popular polls and surveys, the consumer feels that the economy is weakening and is likely to get worse. And if the economy is a state of mind, and if the retail consumer is 70% of our economy, then that points towards economic contraction. And that's what the ECRI says. On the other hand, the last 3 weeks have brought economic activity news that's higher or better than forecast. So it's never 100% certain, but based on this house of cards that's being built to prop up literally Europe and the United States, if Murphy's Law is still in effect, it's easier to see the house of cards being knocked down than being able to withstand the buffeting and everything that's coming. So we'll just have to see what we got. The other thing that we have to, so we have to get through that level, or we're not going to trade higher. So 45, 47 is pretty good support. And you'll see it on yesterday's close was 46. And we've had pretty good selling, so maybe they get stops below the overnight session low first at 43, 45. So we got a chance to buy it below 45. But at some time, I think we'll rally and come back up and at least retest the 48 to 50 area. Okay, if you wanted to look at where a very clean break in the market is volume-wise, right there it is. And if you want to look at where a very clean break volume-wise in the market is, right there it is. So that's potential resistance. And if you wanted to, because this contract is so sloppy, you could pick up that high and you could pick up that high And you could make this resistance. And you could make that support. Structurally, the best buy always is down at the value area low. The best sell is always at the value area high. And these trades, because 67% of the day's volume is encompassed by the value area high and low, trading from this area mechanically, mindlessly, will give you a 67% success rate. It ain't 100%, but it's pretty darn good. And there isn't a technical methodology or study out there that gives you those kind of results. In fact, most technical analysis studies are right less than 25% of the time. There's a couple of them that are right about a third of the time. So anyway, we have our infamous M pattern up here, plus or minus 2 ticks. So here's our M pattern. Plus or minus 2 ticks. You're at the second standard deviation. You break that bar's low right there. You're short in the 53 area, 53 quarter. The first stop was the value area high. If you'd taken yourself out, you were out at 51 for plus 8 ticks. Market comes and gives us another M pattern, plus or minus 2. Listen, folks, this thing trades technically, and once you've got our setups and understand them, you can make a lot of money. You're short here in the 50-50 area, and so far we've traded down to 46.50. There's plus 8, 12 plus ticks for you. Biggest thing we have going on the sell side is right here with the 50 lot trader. So, and you can see ever since here, the volume's been going to the sell side. So taking our setups at value area highs and lows with deceleration or a retest of a pivot high or pivot low is a very, very robust and sound methodology that'll put money into your account. These trades are prescribed. They're transparent. We talk about them day in and day out. So we're in our 8 to 12 resistance band on the note right here. You could be short at 7 on a limit sell, and we'll see what happens. Bill Thomas, in lieu of a raise, we've made you a host again. Don't know why you and John were knocked off last night. Perhaps you made Chris or Peter mad. Just kidding. Any questions?